What's up, traders? Today I will teach you the easiest way to know where the market is headed on the higher time frame without using the higher time frames, daily, weekly, whatever. I am going to show you how I use the daily close to tell me how to trade the next day. If you're new to the channel, subscribe. I have a free mentorship program, link will be in the description. Let's jump into the video. Alright, so understanding how the week is going to evolve is going to give you an edge, because when you come to the screen you are very specific about what you want to see before you trade. So there are a couple of things that you need to understand, so watch the video till the end to understand everything. Alright, so the step number one is understanding the weekly cycle. Now the weekly cycle is simple, and I have simplified it even further so that you can better understand it. These blue lines here represent Monday. So at all times, Monday is the high and the low of the week on Monday. So not on Tuesday, but on Monday. Now on Monday we have a high and a low of the week that is true, genuine. Now we want to work from the high and the low of the week. And how do we do this? So assume Monday has set that high and that low like that and closed. Now this is Tuesday. Now what I want to see on Tuesday is either price breaking out, so price breaking out and closing outside of the range, or price breaking out and closing back inside of the range. These are two very important things, because Tuesday is the signal day. So from Tuesday now we can now start understanding where the week might be headed. Now when I see the price break out of the low of the week and close back inside of the range, this tells me that the next day look for an opportunity to continue buying, because this is called a failed breakout. Now a failed breakout is a signal that we might be having a reversal. Now keep in mind, this is just probabilities, but we have a very high probability that price might be reversing. Now on the other hand, if price breaks out and closes outside of the low of the week, it means that we have a very high probability that price will continue breaking down. So this is a signal that price might be continuing with the trend, and this is where a lot of people get confused, how to identify reversals and trend continuations. Now this is basically how I view things. I only have two signals. Now there are plenty of signals out there, first green day, first red day, blah blah blah. Yeah, they all work, but what works for me best is knowing that a failed breakout, a breakout out of the low of the week and back inside of the range, is a signal that the next day is a reversal day, so look for reversals. And when price breaks out and closes outside of the range, that is now a real breakout, and a real breakout indicates that price will continue with the trend. Now looking at Wednesday, so this is Monday, this is Tuesday. I want to make it this as easy as possible. This is Wednesday. Now just because I traded this failed breakout on this day, on Wednesday, doesn't mean that I won't trade on Thursday, because when price on Wednesday gives us our buy, we have not triggered this high or this low, meaning that we are still looking for buys. So as long as I have a thesis, so say I have a failed breakout, now the close of this day will tell me how to trade on this day, because we have not broken out as a breakout or a failed breakout, we are still using this bias set on Tuesday, and it goes on. Now this is Thursday, Wednesday, Thursday. Now on Friday, price might break out and close back inside as a failed breakout. So we were looking for buys on Friday, but Friday closes back as a failed breakout. This means that when I come to the screen on Monday, as it is setting the high and the low of the week, I still have a bias on Monday, and that is sell, because we closed with a failed breakout. And yeah, basically that is how I categorize, or that is how I look at the weekly template in terms of how do I trade. Now, yesterday on the New Zealand dollar, I want to show you an example of how to use this in lifetime. So all right, so on Monday, price sets the high and the low of the week. Now on Tuesday, we break out and look at the close. We close higher, so we break out of the low, out of the high of the week, and close outside of the high of the week. So this is a signal for me that look for an opportunity to buy on the next day. Simple as that. Because now this is a breakout, a real breakout. Now on the next day, I'll be looking for an opportunity to buy low. Now look at how Wednesday we got our buy. Look at how Wednesday closes in relation to the high of the week set on Tuesday. Price breaks out and closes back outside of that range, meaning I'd be looking for an opportunity to buy low. Simple. Another example, let's look at the Canadian dollar. It's the same. We have Monday setting the high and the low of the week. Now look at Tuesday. Price breaks out, closes back inside of the range. So this is a failed breakout. So I'd be looking for an opportunity to sell on Wednesday. Now we got the sell on Wednesday, but look at how it closed. It breaks out and closes outside of the range, meaning I'd be selling on Thursday. We got the sell. So however you choose to enter during this day, it doesn't matter. As long as you are looking for sales, you are on the safe side. And price broke out, closed outside of the range, meaning today I'll still be looking for sales. So basically, once the high and the low of the week has been set, and then Tuesday gives us our signal, that means we can work our way on Wednesday, Thursday, Friday on all these pairs. And now from all these pairs, we choose the best trade setups in each session or in each day, depending on your trading style. But basically, that is how simple this method is. If you got value from today's video, subscribe